My name is Shanita Jones. I am a Philadelphia native, and I've been working in the tax and financial service industry for over 20 years. But more importantly, our firm specializes in helping childcare providers like you. I have worked with thousands of daycare owners, including family childcare providers, and I've seen firsthand the unique challenges that you face, not just in running your business, but also in navigating complicated tax systems that were not designed with you in mind. And that's why I'm here today to empower you with knowledge, tools, and strategies so you can feel confident and in control when it comes to taxes and finances. So, a quick story about how I became the child care CPA. It all started with my Aunt Karen. She's always been passionate about caring for children, and she was my first teacher. She taught me how to read back in the 80s when children didn't know how to read when they went to kindergarten. But most importantly, she taught me how to learn. But when she started in her home daycare, she very quickly realized how complicated everything was when it came to taxes, especially. From calculating her time space percentage, she didn't even know that the time space percentage existed, to figuring out what expenses she could deduct. And even knowing how to choose the right tax person was a struggle for her. And she trusted the wrong people. It was a struggle and it became overwhelming. She was afraid of making mistakes. She was worried about audits. And she didn't feel like her tax preparer really understood the childcare business. You ever feel like that? Like somebody just does not get you? Well, at the time, I was working full time as an accountant for the University of Pennsylvania. I had a tax business that I ran on the side, but I didn't do business taxes and I certainly did not do childcare taxes. I knew that it was its own world. But here my aunt was at risk of losing her business. She had IRS notices, state notices, city notices, of facing levies and liens. I had a lot of colleagues that were further along in their accounting firms than I was. So I tried to get them to help my aunt. I went to the people that I thought were the best, but none of them were willing to take her case on. They didn't want to listen to her. And as accomplished and as skilled as they were, they also admitted that they weren't familiar with the childcare industry. She was already in trouble, so no one wanted to assume the risk and risk making things worse for her. The accountants I went to get to help my aunt who owned her childcare business couldn't understand how she could legally be entitled to write off so many expenses. They didn't believe her. They didn't understand how she had worked with a professional and found herself in so much trouble. I'm sorry, LJT. That she found herself in so much trouble with so many authorities. The accountants assumed that she was complicit in some sort of wrongdoing, and now she only wanted help because she got in trouble. Now, that's a lot of judgment, right? Now, although my aunt is educated and she's an educator, she isn't educated in the area of tax or accounting. Her childcare studies did not go over those topics with her. Her training focused mainly on child development, curriculum, leadership, and safety. So she had the business operations side down pat, but the paperwork, the numbers, and the business side, it had a lot of room for improvement. Can anybody relate to this? Like, you run the best program, you know everything you need to know to make your program amazing, but you just don't quite get it when it comes to this tax thing. And that's okay. That's why we're here today. You are not alone. And this is a safe place. Okay. So my aunt did not know how to advocate for herself. And when she went to get professional help to advocate on her behalf, she was met with judgment, skepticism, and people that were not knowledgeable enough in the industry to actually help her. So after we heard so many people tell her no that did not want to help her, I had no choice but to learn everything I could so that I could best help her. So I refamiliarized myself with things. One of those things is called the Taxpayers Bill of Rights. That is a real thing. Just like we learned about our rights with immigration, we also have rights with the IRS. So I familiarized myself with that Bill of Rights. I also looked into contacting the Taxpayer Advocate Service. So, despite me not wanting to particularly get involved and risk making things worse for my aunt, I discovered I had no choice. After all, I knew the impact my aunt had made on my life and on the lives of all of the other children that she touched. So, all I knew was that the impact my aunt made on our lives and the 20 years she spent in the industry was too important for me to let someone close her up over some taxes, right? So I stepped in, I helped her, and together we were able to untangle the mess, save her some money, and then we built some systems to make her taxes and her tax process more manageable. And I sincerely hope you're able to take away things to make things more manageable for you. Helping my Aunt Karen open my eyes to see how many childcare providers were in the same boat. After her tax situation was resolved, she told her friends, and they also had gone to the same bad actor, and I was able to help many of them too. A friend told a friend, and that's when I decided to focus our accounting firm on serving people like her, childcare providers, daycare owners, preschool teachers, preschool owners. I was able to help these people who are overlooked, but doing really important work in our communities. So, my goal here today is the same as it was back then, to simplify these complex systems so you can focus on running a successful business without worrying about tax season. So, my goal today is to empower childcare providers to confidently determine your correct filing status, understand the roles of tax professionals, and advocate for your needs effectively so that you can maximize financial benefits and ensure compliance. So, on a scale from 1 to 10, how comfortable are you with advocating for yourself when it comes to tax matters? With 1 being not confident and 10 being very confident that you know how to advocate for yourself. There are no wrong answers. This is a safe place, and you are going to learn how to advocate for yourself today if you don't know how. So here's my disclaimer. The opinions expressed in this training are solely those of my own. Nothing that you hear or see in this presentation or the recording or any materials provided thereafter should be construed as tax advice specific to your situation. I will answer your questions. I will do my best to give you help, but it is not advice if I don't see the full picture, okay? For tax advice specific to your situation, you want to make sure that you're working with a professional that has access to all of your information. At no time will we ever offer legal advices or services. For legal advice, you should contact an attorney who is licensed in your state. So, we're going to do a quick recap for our friends that weren't able to make it in the prior weeks. I want to show you what you've been missing and get you to go back and watch it. So, in week 1, we talked about why it is so important to prepare early. We went over the key deadlines. The most popular one is the April 15th deadline. We went over all of the documents you need, not just the stuff related to your business, but also the stuff because you're still a person and you're still filing a personal tax return. So we went over all of the information that you would need, all of the documents you could possibly need. We went over that. We went over some ways that you can organize without feeling overwhelmed. I gave you some tax terminology. What does those words mean? I showed you some ideas, some suggestions of some systems that might work well to help you. We talked about mistakes to avoid. And then I also gave you a resource which I will give again. I see the comments. A lot of people said they aren't getting the emails. So I'm going to ask the CCPU team because they are like amazing and they're super diligent. But I'll ask them if they could specifically send an email to everyone that's registered for this training. Sometimes we have typos and we might type our email address in incorrectly. And if that happened, it would prevent you from receiving anything. So I'll ask them if they can use this list. So everybody relax. I'll make sure you get everything you need. In session 2, we talked about some key tax forms and guides. We talked about the time space formula. One person was even kind enough to share her space information, and we calculated that and used an example of how much she would get to deduct. We talked about some ways to save money in taxes, how to keep our records, and how to recognize more common mistakes where our business finances are concerned. We had plenty of question and answer time, and I shared with you an actual calculator so you could calculate your time space ratio. But I also overemphasized, and if I didn't, that is my intention to. I also overemphasized that you don't want to calculate your time space expenses and then give that information to your tax person, or you will cheat yourself. So don't do that. It was just for your information only. So, our plan for today is to help you understand how the IRS really determines your filing status, to recognize child care specific situations that impact your taxes, and for you to feel confident advocating for yourself when you work with a tax professional. Even when you work with a tax professional, you still have the right to advocate for yourself. I have a newer client. She's been with us for about a year. And she came because her last accountant kept telling her, oh, you can't write that off. That's too much. That's going to raise a red flag. You're going to get in trouble. But she was being honest. So I don't want anyone to ever miss out on money because they're afraid it's going to raise a red flag. So before we get into the content, I do want to hear from you. Let me know, do you know your filing status? Are you single, married filing jointly, married filing separately, head of household? This is just for fun and it's to get your brains going to make sure you understand what you think your filing status is. And at the end, you'll know how to be able to determine exactly what it is. But when you work with a professional, it's their job to determine what your filing status is. It's their job to ask you the questions and make sure you're getting the most advantageous filing status, right? So, in our first webinar, we talked about all of the filing statuses, why it's important to pick the right one. And today I'm going to show you a tool to ensure that you get it right. Many taxpayers don't know it, but like I said before, many of the questions that your tax people are asking you, they're asking you because we have a due diligence. We are required by the government to ask certain questions. So it's not that they don't trust you, it's not that they think you're being dishonest, it's that they have a license and a livelihood to protect as well. So I see some people are dropping their filing statuses in the comments. Very good. So we're going to take a deep dive into the basics, right? There's only 5 filing statuses, so it's not going to get super complicated. But your filing status is what defines and determines your tax obligations. Your filing status determines your tax rate. Remember last week I showed you the little chart? The rates are different depending on your filing status. It shows you your standard deduction. And your filing status determines if you're eligible for certain credits and deductions. The 5 filing statuses are single, married filing jointly, married filing separately, head of household, and qualifying widower. So, the impact of life changes, your filing status could change from being single to married filing jointly, or from being married filing jointly to being a head of household, or from being single to being a head of household. And no, changing your filing status does not cause a red flag. I get that question a lot because people's lives change. So I don't want anyone to run their lives or their businesses being afraid of red flags. It's okay for your life to change. And I hope that it's changing for the better. So here's a screenshot of those 5 filing statuses that I mentioned a short while ago. And I won't stay here long. So, the first step in determining your filing status is to ask yourself, were you legally married December 31st, 2025, or whatever, if this video is being watched in the future? What is your filing status the last day of the year that you need to file? We're preparing to do our 2025 tax returns right now. Even if you got married in 2026, you could have gotten married on New Year's Day. It doesn't matter. You weren't married the last day of the year. So if you're a little behind on your filings, maybe you have to do a couple of years because you didn't do it for whatever reason. You want to think about what was your marital status on the last day of that particular year, okay? Because all of the filing statuses, the first question you have to ask is this person married? Married people. Married people can choose to file a joint return and combine their income and their deductions. Now, California is a community property state. In a community property state, even if you and your spouse want to file separately, you still have to report half of your spouse's income on your tax return because you live in a community property state, right? So, for many people that are in California, Louisiana, Texas, and other community property states, it just makes sense to file jointly for them anyway. If you have a pressing reason why you want to file separately, definitely discuss it with your qualified tax professional. But in a community property state, unless you meet one of the exemptions, you do have to include one half of your spouse's income, and your spouse will have to include one half of your income as well, because that's the way community property states work. So married couples can choose federally, so that's at the state level. Let's talk about the IRS level. Married couples can choose to file a joint return. It usually results in less tax liability when you file together. So I know back in the day, the tax code used to have something that the wealthy people called a marriage, what do they call it? A marriage penalty. That doesn't exist anymore. And most people will make out better when they file jointly because you get the higher standard deduction and you're not eliminated from being able to receive certain credits that you can't get if you're married filing separately. If you want to think about this a logical way to help you understand, just think about the government only has so many credits and deductions that they want to give the people. And if you're married, they don't want you double dipping and getting twice what one person would get or more than twice what one person would get. So they revamp the tax code, if you will, to make sure that if you are married filing jointly, there's usually no benefit to separating it. Like you're not going to get a high standard deduction for spouse one and a high standard deduction for spouse two. And that's why when you file separately, the IRS wants to know who you're filing separately from. So if you're filing separate from your spouse, you must include your spouse's name, social security number, and birth date because the IRS is checking, well, she's married to this person and he's married to that person. Let me make sure that they're both filing separately. Or if one is filing head of household, they qualify. Your return cannot be submitted without that information. So people that are married filing separately, they maintain individual responsibility for their tax liabilities. What does that mean in English? If we file separately, you responsible for paying your taxes, I'm responsible for paying my taxes. If I get a refund, I don't have to share with my spouse. If my spouse gets a refund, he doesn't have to share with me if we're filing separately, right? Now, I told you that you usually make out better filing jointly, but there are some situations where it makes sense to file separately. It can be beneficial when one spouse has a lot of medical expenses or miscellaneous deductions. But you should be advised that if one spouse itemizes their deductions, then both spouses must itemize their deductions. If one spouse takes the standard deduction, then both spouses must take the standard deduction. And we talked about itemized and standard deductions in week 1, recording number 1. Some spouses might choose to file separately because one spouse owes a lot of back taxes, or one spouse owes student loans and wants to get an income based repayment plan, or maybe one spouse owes child support or other government debt and you're expecting a refund and you don't want that refund to be taken away. Now, this is where somebody usually asks me if they can claim their spouse. The answer is no. If you are married, you cannot claim your spouse. You can file a joint return even if only one spouse has income. A lot of couples are in the process of repaying student loans. Maylee, did you need me? Okay. A lot of couples are in the process of repaying student loans and are on income based repayment plans. So some couples will file separately, even if they know they will pay more money in tax because they're concerned with having a lower monthly payment for their student loans. So if you find yourself in a situation, I have a client in this situation, and the client wanted to file separately so that they could have lower student loan payments. But then she went and talked to her friend and the friend said, well, you should file jointly because you would owe less in tax. All of this was explained to the lady and her husband, right? It was all explained to them, but then they came back later after talking to somebody else. Now, they still did the right thing for them, but this is why it's important to advocate for yourself, to ask questions. If you're working with a professional and they send you messages, answer their messages. There is an injured spouse and there is an innocent spouse that you can file, but a lot of times it's cleaner to file separately. It's going to depend on when you work with your specific tax advisor. So we get into a lot of this when we help people with IRS representation. So I saw your question in a comment, but it really depends, Guadalupe. And I want to visit that city one day. Okay. But I want you to be aware that filing separately can disqualify you from certain credits and deductions. Also, if you're married and you decide to file separately, you cannot take a deduction for student loan interest or tuition fees and deductions in years where it's applicable. If you're married filing separately, you cannot get earned income credit. You cannot claim the American Opportunity Credit. That's if you have people in college. You cannot get the Lifetime Learning Credit, which is another credit for college. You cannot get the Child and Dependent Care Credit. And in many cases, you can't get the Adoption Expenses Credit. You should also know that the deduction for IRA contributions is reduced or eliminated for those that are married filing separately. Also, the threshold for phasing out on certain deductions and credits is usually lower for separate filers. I want to be clear that while filing separately, while it may result in a lower tax liability, in most cases, married filing separately couples do end up paying more in taxes if you add what spouse A pay and what spouse B pays a lot of times. But it's a specific calculation. And many times, if you want your professional to do it, they probably will charge you more because they have to do your return, your spouse's return, and then they have to do one combined. So when you ask them to tell you the results, you're asking them to do 3 tax returns. So don't be surprised if you get a bill that's twice or 3 times what it would have been, especially if they already know and they tell you and you just want to see the numbers for yourself. But you are completely entitled to have them do that if you want to make sure. So let's go to the next slide. Head of household. I get a lot of questions on this filing status. There's a lot of confusion on this filing status. Going to come back to head of household in a minute. I want to take a couple of questions. So someone asked, how can I get a 1099 form so that my assistants can prepare their taxes? Now, we talked about this last, was it Thursday night? We were together and we talked about this last week. First, you want to make sure that those assistants should really be receiving a 1099, especially in California, because California has very strict labor laws that they enforce. They're very good at enforcing these laws. But if you must file someone as a 1099 contractor, I suggest using the website. This is what we use to file for our clients. It's called track1099.com. It'll take you maybe 10 minutes to file the 1099 and make sure you share it with the person. Someone asks if they are able to deduct memberships like Costco, Amazon, and Sam's Club. Well, we've been together long enough. I'm going to ask you a question. Do you regularly use Amazon, Sam's Club, and Costco? Is it ordinary for you to shop at these places for your daycare business? Is it necessary for you to shop at these places? Yes, it is. So remember, the IRS says ordinary and necessary for us to deduct it. And we talk a lot about that in recording number 2. I don't understand the question about Hesperia. So whoever typed that, if you could go back and clarify that question, I'll be more than happy to come back to it. I don't have any referrals to tax professionals in your area. It could be that I'm a little bit biased because we prepare taxes in all 50 states. But honestly, it's because when you refer someone, you're kind of putting your name on a line for them. And I don't know anyone in California that specializes in childcare tax. But I'm sure that they do have a lot of really qualified people there. I just don't know of any that specialize in childcare. But I do know a lot of accountants all over the country. So, someone says, my name is Dizen Lai. This is my first time participating. Thank you for joining us, and we will make sure that you get your materials. Anyone that is participating, you will get an email, and we're gonna ask CCPU. Maybe there were some typos, so we'll ask them if they can send. Now, if y'all get too many emails, don't be mad at me for making this request, but we'll make that request. So some people may get the email more than one time. Okay. Here's a question. I really like this question. It says IRS Publication 587, pages 13 and 14. She's been reading. It states that for a home daycare, food for the children is a business expense, but it must be deducted using the percentage of commercial use of home time space. That is true if you feed your daycare children from the same pot as you feed your family. If you are buying specific things for childcare, like most of our clients do, and you're buying specific snacks and specific treats, and you're not eating that, and your family isn't eating that, or if you are eating it, it's because you are teaching the children and you're eating in family style, then I would disagree with that because it's not time space. The children are actually eating things bought specifically for them. Someone says they are divorced and have no dependents. How would you file your taxes? So I'm going to ask you a question. Were you married on December 31st, 2025? If you were married on December 31st, 2025, you're going to be separately or you're going to be jointly. If you were divorced already and not married, you're going to be single and maybe you qualify for head of household, right? So let's talk about head of household. I have another question, and y'all just set me up with with the questions in the order y'all make them. I couldn't have put these questions in better order if I did it myself. So someone asks, what is better, head of household or married filing separately? It's not a matter of what is better, it's a matter of what's appropriate. So if you were married filing separately, you're married filing separately. Your spouse could have lived in the same home with you all year, the last 6 months of the year. Maybe you have a happy marriage and you're just not filing together. Or maybe you're in the process of divorcing. Or maybe your spouse lived out of the home. You still would be married filing separately. But the head of household filing status could apply to a married person if they lived apart the last 6 months of the year and the spouse that wants to file head of household took care of a minor child. So in that case, the IRS can consider them as unmarried. It's called considered unmarried. You're not unmarried. They can consider you unmarried. Now, the head of household status is typically for unmarried people who have paid more than half of the cost of maintaining the household for themselves and for a qualifying person, such as a child or dependent parent. This status offers a higher standard deduction and more favorable tax brackets. And I showed you the tax brackets last week. For example, a single parent supporting a child may qualify as head of household. Now, it's not common for married people to file as head of household. And if you do it and you're not supposed to, you can get into a lot of trouble. You can be fined, you can be penalized, you can be disqualified from being able to receive some credits for up to 10 years if you misappropriately use this status. But there are some ways where a person can qualify to be considered unmarried, right? So you have to file a separate return from your spouse, pay for more than half of the cost of keeping up your home. The spouse cannot have lived in your home for more than half of a year. If you need Spanish, please switch to the Spanish channel, or I can start speaking Spanish, but it will be really bad. To be head of household, your home has to be the main home for the qualifying child for more than half of the year. You have to be able to claim the child as a dependent or could claim them if it wasn't for the non custodial parent claiming them. Now, some additional requirements. Even if you meet the considered unmarried criteria, you must still satisfy the head of household requirements. You must have a qualifying person. Every year, I get a taxpayer. It's usually an older person who had a house full of people all their lives, and it's their first year that they're just alone. And the married person will say, I'm head of household. I paid all these bills. This is all me. And I'll say, sir, ma'am, I'm sorry. You're not head of household if you don't have a qualifying dependent. And then it goes from there. So, special cases. If your spouse is a non resident alien at any time during the year, you may be considered unmarried for head of household purposes, provided you don't choose to treat your spouse as a resident alien. Another exception or a special case, to find a globe in your Zoom to switch to Spanish is in the bottom. I think it's towards the right-hand corner and you see a little globe, okay? And you can switch to the language that best meets your needs. So, temporary absences. It's important to note that temporary absences like military deployment, medical treatment, or going away for education is not considered living apart, and it will not disqualify you or it may not disqualify you from being considered unmarried. Filing as head of household when married is a complicated situation. So you want to make sure that you really understand it and you're doing it all right because the penalties are very severe if you take that filing status and you are not entitled to it. If your spouse passed away within the last 2 years, you have my condolences, or even if it was beyond that. But if your spouse passed away within the last 2 years and you have a dependent child, you may qualify for the fifth filing status, and that is the qualifying widower status. And the qualifying widower status is beneficial to some people because you get the same higher standard deduction that you would have if you were married filing jointly. So that's why we like that status. So the IRS does have an electronic tool that will help you choose the right filing status. So, I'm real big on empowerment and helping people to understand how to solve their own problems or at least get information. So, IRS help find filing status, and I have the web address. So the IRS has an interactive assistant tool, and we know we can trust this because it says .gov. And if you go on here, and I'm not going to go through the whole thing, but I want to show you how it works. You would go in here and you would answer some questions. And based on your questions, it's going to tell you your filing status. And the first thing they asked is, were you married at the end of 2025? Right? And then it's going to ask, did you pay for more than half of the cost of keeping up a home? The same things that I'm telling you is on this interactive tool. So if anybody is not sure of what their filing status should be, I will share this link. And I believe the IRS usually makes everything available in multiple languages. I don't see multiple languages here, but I will Google to see IRS interactive filing status tool in Spanish. I don't know if they usually have everything. Yep, they do have it in Spanish. Okay, so we are going to go back. Okay, so I told you how to understand it for yourself, but I've also shown you the IRS website where you can answer some questions. But I want you to be careful. Two common areas or errors that people make, and that's incorrectly claiming head of household, even though you meet all of the requirements. And then some people fail to use that qualifying widower status. So, in summary, understanding your filing status and selecting the correct one is crucial for accurate tax reporting and for optimizing your tax benefits and staying out of trouble. If you're not sure which status applies to you, consider working with a tax professional or using that electronic interactive tool that I just shared with you. Again, here are the five. There's only five. Notice there's not one called single head of household. People always tell me I'm single head of household, and I said, and I just smile. I used to explain it to them. I don't fight them anymore. It's two separate things. And I like how head of household translates in English. I just realized how it translates. It translates in English to boss of the house, boss of the family. I like that. That's really how you can think about it. So, how do these filing statuses impact your taxes in 2025? Your filing status determines which income thresholds and which tax rates apply. For 2025, we have 7 tax brackets. There's the 10%, 12%, 22%, and it goes on. It goes all the way up to 37%. So, for example, the 22% tax bracket in 2025, if you're single, and I'm going to show these numbers to you because I don't think me explaining them do it justice without you being able to see. So I'm just going to, and this is probably what I showed you last week. So see, your tax brackets are based on your income, and it's also based on your filing status, right? And see, there's ranges. So if you made $100,000, all of your income is not going to be taxed at 22%. The first 11,925 will be taxed at 10%, and then the 11,926 to 48,475 will be taxed to 12%, because we in United States have what they call a graduated tax scale. So you can see that my tax brackets and how my filing statuses are is different. So if I'm married filing jointly, more money gets taxed at 10% than the limit of being a head of household. So that's why your filing status is important. Also, for certain credits, including the child tax credit, your filing status affects your eligibility. The child tax credit can be up to $2,200 per qualifying child. And then it starts to get reduced of how much of a credit you get based on your filing status. So it's $200,000 for most people, and it's $400,000 for joint filers. And Consuelo is in my brain because she was typing her question while I was answering it. And she said, "Is it true that once your income reaches 75,000, you are no longer qualified for credit of your dependents?" Consuela, that is false. Okay. You do still get credits, you do still get deductions, but some of them begin to phase out, meaning you get less the more money you make. So now we're going to talk about some scenarios of some filing statuses. We're going to bring in some real life scenarios. I'm going to go grab a couple of questions for you while we think about our questions about filing status and while we talk about some of these scenarios. So someone asks, do I have any info on mileage or gas vehicle tax in California? So, one thing I want you to remember about the new tax law is that if you bought a personal vehicle not used for business at all, and you bought it after December 31st, 2024, and the vehicle had its final assembly in United States, you can deduct up to $10,000 in interest that you might have paid for that vehicle. And I'll probably come back and post a video with more information on the California question.
I'm sorry.
Someone said,
Could we
I am
repeat that
retired and I have
answer?
childcare. Do I need to do both together, business and Social Security? I'm going to restate that question to what I believe it means. The person said that they are retired and they have their childcare income and they also have Social Security. Yes, you need to file it all, and you probably need to file it all together because I'm assuming that you're a Schedule C sole proprietor. Another question. My husband and I filed married. He got laid off October 8th and couldn't find a job. Now he's retired. Does he still file head of household? Okay, this is one of those real world scenarios. I'm going to answer your question by asking you a question. Going to restate it one more time. They said, my husband and I filed married. He got laid off in October 2025 and could not find a job. Now he's retired. Does he still file head of household? The key word she said was my husband. So now I know that he's married. So if he's married, that already takes him out the box from being head of household. So now we're looking at him being married. So to answer your question, you and your husband would probably file a joint tax return because you wouldn't be head of household just because he wouldn't have been able to file head of household anyway if he was married and he was still employed. The injured refund, this is another question. The injured spouse is filed to avoid the refund being taken. The injured spouse is filed to prevent the innocent spouse portion of the refund being taken, yes. But like I said, usually that's part of a IRS representation matter. So you want to make sure that it even applies. Depending on your family situation and everything, um, oh, somebody asked me to slow down. Okay, Claudia. Thank you. Okay. Someone said, so if I'm married in November 2025 and we both worked, but I have two minor children that are not his, what would be my status? So I got married in November 2025. So now I'm married. We both worked, and I have two minor children that are not his. When you get married and you, under the IRS law, I'm glad you asked this question. When you get married, your spouse's children are your children. Familial family relationships do not end in death and divorce where the IRS is concerned. So, you and your new spouse, congratulations. You and your new spouse and your two children can all file together, even if he's not the biological parent of your children. So, we're going to talk about some more specific scenarios. So, we just had a couple of scenarios that we're asking. So, I think I'm going to use the examples that we have. So, someone said, I never got a divorce, but I'm separated for 15 years. I hardly speak to him. I can put head of household and declare myself married or single. So, if you have a spouse and you have been separated for 15 years, you don't live together. If you have a qualifying child that could make you head of household, then you can file head of household. But if you don't have a qualifying child and you and your spouse are just separated, then you have to file married filing separately. Because remember, it all starts with the interactive tool. And I gave you that link so that you can run your scenario through. Someone said, I have always filed jointly with my husband. Can I file separately today? Sure, if that's what's best for your situation. Mm. Another question. What is best when my husband is retired and we file a joint tax and end up paying a lot? I would suggest that you get yourselves an accountant. Number one, you're probably not paying any or enough taxes during the year, and that's why you owe. So I would definitely encourage you to have someone look at your specific situation. Maybe your husband isn't having any taxes deducted. Maybe you're not paying estimated tax payments. Maybe your business isn't structured in a way that's ideal for tax savings. Maybe you're not getting all of the deductions you're entitled to. It could be a lot of reasons why you end up paying a lot every year. And you're going to want to have somebody that's knowledgeable take a close look at your situation to help you figure out why and to help you figure out how to reduce those taxes. No, you do not have to include alimony as income. Let's see. Someone asked, can my filing status fluctuate year by year? Some years I make more than my husband due to higher enrollments. So, can my filing status fluctuate year by year? Some years I make more than my husband due to more enrollments in some years. Your filing status has nothing to do with your income. And yes, you can file separately and jointly some years if that's what makes the most sense. But remember, if you owe $10,000 and your spouse gets a refund of $2,000, it's going to net out to 8,000. 10 minus 2. So it really all depends on your family situation and how you manage your finances and what's best for you. So, when we talk about these filing statuses, I want to tell you an example of a single parent that has shared custody of their child. So, this would apply, you could imagine you're a child care provider and you've lived with your child for more than half of the year, but you share custody with the other parent. So, head of household. You might qualify for head of household if your child lives with you for more than half of the year and you pay for more than half of the cost of maintaining your home. This status will give you a higher standard deduction and you'll get more favorable tax breaks than if you were to just file single. Single, if you don't meet the requirements to be head of household, even though you have a child to claim, you would file as single. This applies if your child lives with the other parent for more than half of the year, or if you don't contribute more than half of the household expenses. Remember, this is not our married person, this is our single person. So let's say you pay the rent, utilities, and groceries for your household, and your child lives with you for 8 months out of the year. In this case, you would qualify as head of household, even if your child, you would qualify for head of household. You qualify for single as well, but head of household would give you a better outcome. Let's look at another example. This is a person, a child care provider. She is married, but she's separated. This situation can make choosing your filing status tricky, especially if you're living apart from your spouse. So, if you're separated from your spouse, you can file married filing jointly. This usually results in lower tax rates and eligibility for more credits, but both spouses are jointly responsible for any tax liability. And this is where we start talking about the injured spouse, and this is where we start talking about the innocent spouse as well. If your spouse has income that you want to combine, this may be the best option. Marry filing jointly, separately. Filing separately could be beneficial if your spouse owes back taxes, if they're underreporting income, or they have high deductions unrelated to your finances. However, this status does disqualify you from certain credits, like the earned income credit. So, in this case, imagine you're legally married, you did not live with your spouse all year, but your spouse has a history of not paying taxes or having a large medical expense to deduct. Filing separately could protect you financially, but if you do file jointly, you can file as an innocent spouse. You can do these a lot of these things, but they often take a lot of time. So with our clients, we make sure it makes sense. What are you going to lose if you don't file jointly? Sometimes they're not losing anything, so we don't have to worry about it. Sometimes they are. Usually they aren't based on their situation. And that's why we ask a lot of questions of them so that we can understand their situation and know how to best help them. Um Now let's talk about the widowed person. If your spouse passed away, this can be overwhelming, just not knowing what to do. If your spouse died in the last 2 years and you're supporting a dependent child, you might qualify for qualifying widower. This will allow you to use the same tax rate, the same standard deduction rate that you would have used if you were filing jointly. And you'll get a better outcome than if you just use single or filing head of household. So let's look at a case study. And Maria, she's a child care provider She shares custody of her 8-year-old person, of her 8-year-old child. I'm sorry. Let me go back. She shares custody of her 8-year-old child. The child lives with her 7 months of the year. She's separated from her spouse, but they don't have a legal agreement. And Maria pays all of the household expenses. What do you think Maria's filing status would be? I'm I'm reinforcing our learning. What do you think Maria's filing status would be? She's separated from her spouse. They're not divorced. She has an 8-year-old child. She pays for all of the expenses. So Irma's got it, Guadalupe and Elsa and Norman. That's right. Jefe de familia. She is head of household. Okay. So if you were to go through that interactive thing and you didn't know, it would have led you to that same conclusion. Andrea asks, if my spouse only has a TIN number, is it better to file myself or together? I would say, in light of everything that's going on, I'm going to say talk with your tax professional. I don't want to give my comment while we're recording, but you can choose you can choose to file your spouse as a resident. You may have to mail it in because you can't electronically file it if they have an ITIN, but I would go with whatever is best for my family, but I would also make sure that we're being safe as well when we're filing. I would go with whatever's best for my family. So some key takeaways. Your filing status will affect how much tax you pay, what your tax rate is, what deductions you're entitled to. Your life circumstances, like having custody of a child, getting a separation, they play a critical role. So you always want to evaluate your situation critically and make sure that you're factoring all considerations. But to wrap up on these filing statuses, just remember how big of a role that your filing status plays in your tax outcome so that you can make informed decisions. And if you are ever not sure, I encourage you to consult a professional so that they can help you so that you don't miss out. We're about to switch gears a little bit and we're going to talk about but let's see how much time do we have. Yeah, we're going to switch gears a little bit and we're going to talk strictly about advocacy. Magdalena said if you are a widower with no kids, you would be a single filer because we would start first with, are you married? No, because my spouse passed away. So you would be single. So now we're going to talk about advocacy. Remember in the short story I shared with you about my aunt? She had gotten into trouble because she thought she was doing everything right, but she trusted the wrong people. She found herself in a heap of trouble. She did not know how to fight for herself. She didn't even know that she had the right to fight for herself. Well, my aunt and her friends, like millions of Americans, millions of people in this country, countless childcare providers, she thought once the IRS sent the notice or her state or her city that it was correct, that it was final, and she had to accept whatever they said and pay whatever they told her to. While this is true in many cases, if you owe that you have to pay up, but the IRS, the state of California, and the city you live in, it is run by humans. And humans make mistakes. So I don't want to see you blindly just pay money that you are not legally obligated to pay. Okay? And this is where advocacy comes into play. My aunt and her friends, they did not have anyone to advocate for them at first. They were not aware they had rights. They thought if they received the bill, they had to pay it or they would go to jail. It does not, you do not go to jail that quickly. You do go to jail if you get in tax trouble, if you get enough trouble. But in my 20 years of practicing, I've only seen two people go to jail behind taxes. And those two people that went to jail, it was because of fraud and not because of innocent mistakes. Okay. So the intent has to be there. So don't be afraid. I want to talk to you about the Taxpayer Bill of Rights. Um, okay. So the IRS has a Taxpayer Bill of Rights, and it outlines the fundamental rights you have as a taxpayer. Understanding these rights can empower you to be able to advocate for yourself and to make sure you're being treated fairly. These are 10 rights every taxpayer has. You have the right to be informed, the right to receive quality service. You have a right to pay no more than your correct amount of tax. You have the right to challenge the IRS and be heard. You have the right to appeal a decision. You have the right to finality. They can't bother you forever. You have a right to privacy. They do not have the right to just tell everyone your business. You have a right to confidentiality. You have a right to retain representation. In fact, if you are in trouble with the IRS, I suggest you retain representation. You can get representation from a certified public accountant, from a tax attorney, or from an IRS enrolled agent. You cannot get representation from somebody who is not licensed and they just do your taxes. If that person is not a certified public accountant, if they're not an IRS enrolled agent, or if they are not an attorney, they cannot represent you before the IRS. You also have the right to a fair and just tax system. How many of you have heard of the Taxpayer Advocate Service? The Taxpayer Advocate Service is an independent organization within the IRS that serves as your voice in the IRS. The Taxpayer Advocate Service was established by Congress. Their mission is to protect taxpayer rights and to help individuals and businesses resolve tax problems that they haven't been able to solve through normal IRS channels. The Tax Advocate Service is designed to help taxpayers who are facing significant challenges. Magdalena, you can absolutely represent yourself, but if I had a tax problem, I wouldn't even represent myself. You know why? If the IRS asks Magdalena a question she doesn't want to answer because it could get her into trouble, Magdalena can't say, I don't know. But if I'm representing her, I can say, I don't have access to that information right now. Let me go talk with my client. And somebody representing you can stand in a gap. And a lot of times, those questions that we don't want to answer, we can avoid answering. When you're representing yourself, unless you've studied the IRS code and can effectively represent yourself, sometimes you can get yourself into more trouble by just not even understanding how to conduct an interview with an auditor or a revenue officer which is who you are more likely to see. So I would never represent myself before the IRS, or if I had some other matter, I would never represent myself. I wouldn't even go to the meeting, and that's why some of the stuff we're going to talk about is important, because I'm going to tell you some ways you can choose a good person to represent you and your interests. But I wouldn't even go to the meeting because I don't want to answer questions. That's what I have a representative for. So I'm going to talk about these rights and what they mean. The right to be informed. That means the IRS must provide clear, understandable explanations about your tax obligation. The IRS must tell you how to follow the laws and any actions that they take on your account. The IRS also has to explain notices sent to you. Now, in our firm, we're really excited because we rolled out something new this year. Every year we had people that came to us and they only hired us to do their taxes. We're not their accountants all year, we're just their tax preparers. But we noticed More and more people wanted more support during the year, but they weren't ready to have an actual accountant. So we created packages where they can enlist us to work with them on tax matters during the year without them having to pay a monthly fee to do that. So we're really excited to see how that goes because we know it's going to help a lot of people this year. But an example of being informed is you receive a notice about an IRS says discrepancy in your income. And then that rate that you have makes the IRS have to include the details about your notices. Now, a lot of these notices are not easy to understand. And that is why a lot of our clients would contact us all year and they weren't our clients. So previously we would say, well, we got to charge you for this and we have to charge you for that. But we noticed that some of our, especially our people with employees, they run into a lot of different tax notices and letters during the year. So now they'll be able to have support when that happens to them. But the tax advocate service is free. You don't have to pay the tax advocate service. They will start over whenever whenever the IRS goes to represent you if things are in motion and you call the tax advocate service in, it does usually start everything over. Um, you have the right to quality service. You are entitled to courteous, professional assistance from the IRS. You should be able to receive clear and timely answers to your questions. If the IRS fails to provide you that, you can file a complaint. I've had clients where the IRS officers were rude, demeaning. Not most of them. I've only seen it happen 3 or 4 times, but you can file a complaint. And if you call the IRS and you feel that they're being rude or dismissing you without a proper explanation, you can ask for a supervisor and file a complaint. Because remember, the IRS works for you. Your tax dollars are paying the IRS. You have a right to pay no more than the amount of tax that you are required to pay, right? Um, they cannot make you pay extra tax for some random reason. You only have to pay what's due. That does include interest and penalties. And if you overpaid, the IRS has to give you your money back. But if the IRS owes you money, and they also have to pay you interest if they're late paying you. How you like that? You have the right to challenge an IRS's position. You can challenge the IRS's decision if you have additional documentation or you need to raise objections. The IRS must consider your evidence and provide a response if they disagree with your position. If the IRS denies, for example, your home office, you can submit records like logs of your time space usage. You can provide videos or pictures of what's being done in that area. You can in childcare, you can even provide what you're licensing, what they approve to be your childcare space, right? You have the right to an appeal. If you disagree with a decision and it's final, you can take it to the IRS's Independent Office of Appeals, or you can go to tax court if you need to. And that will help you to get a neutral review of your case. You have the right to finality. That means you have to be given a time frame of when your matter will be resolved. You should be informed about deadlines for any actions or audits that you face. Our firm spends a lot of time representing taxpayers, people who owe a gazillion dollars or what feels like a gazillion dollars, people that haven't filed their returns in years and they're getting notices and they feel they're being treated badly by the IRS officers. We step in and we represent them as well, and we get all those back taxes filed. You have a right to privacy. Your interactions with the IRS must respect your privacy. They can only ask you about things that are relevant to your tax situation. If you're audited, the IRS cannot ask you They should not be asking you anything about your personal life. I had an IRS auditor once try this with one of my clients. Well, it wasn't an auditor, it was a revenue officer. And he was looking on the internet, and my client was a couple of $100,000 behind in taxes. But he saw on the internet that she had been traveling and had been out of the country, and he made reference to that. That's also a reminder, be careful what you post on the internet. But he started asking her personal questions, and I said, "Excuse me, how is this relevant to us resolving this tax debt?" So I didn't report him. I didn't need to call his boss in this situation. I just needed to bring him back and make sure that he was aware and considerate of her rights. You have a right to confidentiality. Without your consent, the IRS can't share your information unless it's authorized by law. And that's why you see Donald Trump suing the IRS right now, $10 million, because his return was um, leaked. Allegedly, it was leaked, right? Now, every other president before, you can Google Obama, Clinton, George Bush, Democrats and Republicans, you can Google and find their tax returns online. Trump didn't want his to be online. And guess what? He's within his rights to sue the IRS if they did leak it. Now, being a tax professional, we end up being very good at not being we can see the good and bad in politics. So I'm not a political person. We can see the good or bad. So I am by no means defending any politician or criticizing any politician. Um, you have the right to retain representation. You can hire a certified public accountant, an enrolled agent, or an attorney to represent you for your dealings with the IRS. If you cannot afford to hire one of these professionals, you might qualify for assistance through a low income taxpayer clinic. So if an IRS sends you a notice, you don't have to handle it alone. You can appoint your CPA, your attorney, your enrolled agent to respond on your behalf. Now, they will talk with you. So when we're working with clients to help them get payment plans, I'll ask my client, what is the most you're comfortable paying per month? And if we can get a lump sum payment, I'll do the calculations and tell them this is what the IRS will accept at a minimum. Am I allowed to negotiate this for you? So then I go off, work my magic, do what I do, and then I come back and tell them. Now my client doesn't have to say anything that might incriminate themselves because they aren't speaking. Okay? You have the right to a fair and just tax system. The tax system should consider your circumstances, such as if you have a financial hardship, and allow you to request relief if you cannot meet your tax obligations. Maybe your income has dropped so low where there's no way you can pay the IRS. We help our clients get on currently not collectible statuses. This means the letters stop coming, the threats stop coming. The person still isn't paying their tax, but they have a window where they can breathe without the IRS stressing them out. And beyond individual tax cases, you have the Tax Advocate Service, and they work to identify and address systemic problems within the IRS that affect a large number of taxpayers. The Taxpayer Advocate submits annual reports to Congress, and they recommend changes, administrative changes, legislative changes that are needed to improve our tax system in the United States. As childcare business owners, you might want to reach out to the Taxpayer Advocate Service if you're experiencing economic harm or significant costs due to a tax issue. So always tell people if you're having a problem because you were due a refund and you didn't receive your refund and it's beyond the date that they say, you can contact the Taxpayer Advocate Service. If you are working representing yourself and the IRS is not responsive to you, you can contact the Taxpayer Advocate Service. They do not charge, they work for the government. But if you reach out to a professional for support and that's their business, they probably will charge you. So, and they probably will work on your case a little bit faster and you probably will get different results because the taxpayer advocate is a public service, but they are good. When we reach our boiling point, even in our practice, with IRS employees that do not conduct themselves in a becoming fashion, we'll reach out to the taxpayer advocate service as well. So if you've tried to resolve your situation through normal channels and you haven't been successful, sometimes the taxpayer advocate service is a really good option for you. You can contact them if you are facing an immediate threat and you don't have anyone else supporting you. You can contact them if you've tried your best to resolve things and it has not been successful. Again, if you have not received any of your certificates, I believe you should email CCPU and they'll get them for you. If you did not get any of the recordings, CCPU will be sending them all out again. And I'll ask them if they can send a special email to everyone who is registered for this training because I am seeing more of these questions today than I've seen in the past. And I want to make sure you all get everything you need. So we do see you. The wait on the phone with the IRS is very long. Unfortunately, there's nothing I can do about that. That is just the state that we live in with the IRS. We actually have people that hire us for representation because they're tired of being on the phone. But I have a trick for you. If you're cleaning, if you're cooking, get yourself some earphones or some earbuds and stay on hold while you're doing something else. I believe they stay open till 7 p.m. your local time. So if you need assistance, you can request help by submitting a Form 911. It's a request for taxpayer advocate service assistant. This form can be downloaded and it can be mailed in. You can also call them. Their number is going to be on their website. And we all know how to Google taxpayer TAS website, taxpayer advocate service. This is the phone number. I'm going to put it here in case anybody needs to jot it down. And I'm going to let it linger while I go look at a couple of questions that we might have here. Somebody's asking for our website. I will give you our website. It's super easy. It's the childcarecpa.com. And somebody asked about the support packages. We do have a quick conversation. We talk with everyone first just to make sure that we can help them. So we want to make sure we can help you before we just put you in queue. And that's usually a Zoom call, or you can call our office. But if you do a scheduled Zoom call, then that time spot is set aside just for you. Um, Somebody said, I am head of household. Would I qualify for EIC? Maybe. Um, your EIC qualification isn't just about your filing status, it's also about your income. Somebody said, what is the IRS assistance program called? It's called the Taxpayer Advocate Service. And that is for people, it's not just because you have a question, okay? It is not just because you have a question with the IRS or because you are behind on your taxes. This taxpayer advocate service is for if your rights are being threatened. Payer advocate. And I'll put the link in the comments. They will, did I give you the right link? Yeah, I did. They are not there to answer questions like, can I write this off? Can I write this off? They're not there for that. They are there to protect you and to assist you when your rights have problems. No, we do not. I think we have, somebody asked, do we have a list of packages that we offer on our website? There may be a list of packages on our website, but our tax support packages are not there because they are new and this is our first year offering them and we don't want to publish them because as a CPA if I publish it on a website, I have to keep it there and there's a lot of rules to how long I need to keep it. So we're only going to accept a few people into the pilot program this year and see how we like it. So we don't want to, it's not on our website yet. I have another question. Someone said, if you have a feeling that your tax guy filed something wrong, now you face a balance in penalties. What is the status of limitations to an amendment? That is a good question, and I'm going to reframe it. Somebody said they believe their tax guy did something wrong, and now they have penalties, and they want to know about the statute of limitations. The statute of limitations is 7 years. Um, and that relates to how long the IRS can collect, but that's if is no fraud involved. If it's believed that your tax guy did something fraudulent, then there is no statute of limitations. The IRS can come after you indefinitely. So, how long can you do an amendment? You can do an amendment whenever you discover one needs to be done. There is no statute of limitations. If you're due a refund, you can only get a refund if you do that amendment within the 3-year window. But if you're correcting your return because something was done incorrectly, then there is no time limit. Someone said, I was told I could not claim expenses due to caring for my grandkids. Is this incorrect? It depends. It depends on what expenses you're trying to claim, and it depends on if you're conducting your business like a business. I noticed that a lot of people will say, I'm just a grandma. You are not just a grandma. My aunt was not just an aunt. She was an educator. She taught me how to read, right? So if you're conducting it like a business, then and you have business expenses, you are probably entitled to claim those. So someone told her, there's an I-10 question. I'll come back and answer the I-10 question. Our firm typically works with, we do have some people with I-10s, and sometimes they need to be renewed, but there's different reasons that I-10s are issued. So that's a little bit of a longer response. But I do want you to know I see your question, and I'll do a video after the fact about your question. Someone said, can donations to a funeral home count as deductible? It could be deductible if the funeral home is a nonprofit organization, which I doubt it is. um, Someone asks how you can get the bundle. Or do you mean a bundle of the recordings? CCPU will be sending out the bundle of recordings. I don't know if they're calling it that, the 3-part series. If you're talking about working with our firm, I'll put it in the chat. Just go to the childcarecpa.com. And when you schedule a Zoom call, just a 15-minute Zoom, when you schedule a Zoom, then our team will tell you, they'll find out if you know what's for you. They'll help you decide. Let's see. Looking for any more questions related to today first. Okay. So we've all had a chance to get that number on their website that I gave you in the comments. You can submit a form 911, and that's where you're requesting support because your rights are being mistreated. So another real life situation that happened, we had a child care provider. She submitted her tax return on time and she claimed the time space for her business use of home. The IRS flagged her return and they withheld her refund. They said her calculation was invalid. She provided all of the additional information that was needed and it just dragged on for months. They did not give her her refund. This created financial strain because she needed her refund to make some updates to her home so that she could comply with licensing and also expand her business. Well, we ended up contacting the Taxpayer Advocate Service, explained the situation. We had to give them everything all over again. So she hired our firm, and we still ended up having to go to the taxpayer advocate because we knew it would be faster. They worked directly with the IRS, and her issue was resolved in 2 weeks. My client received her refund, it was not reduced, and she was able to expand her childcare business. So, some key takeaways: the taxpayer advocate service is free, there is no cost to use their services, and they protect your information. You work with a dedicated advocate who they should stay on your case until it's resolved, but there's been a lot of changes with the federal government last year and this year, but it seems like they try to keep you with the same person. And they also work on systemic issues that impact the tax situation. So, while the IRS does have this really good free service that is available, they're not the only ones that you can call for support. There are some professionals, and I've talked about them. There are certified public accountants. That's what our firm does. There are enrolled agents. They're licensed by the IRS. There's tax preparers. Tax preparers cannot represent you, but they can do your taxes. And that's a tax preparer who does not have a designation. They're not a certified public accountant. They're not an enrolled agent. A lot of tax preparers do a really good job. They're just not licensed. And then there's tax attorneys. These are lawyers who specialize in tax. And you typically need a lawyer if you're being accused of something criminal. That's when we call tax lawyers because tax lawyers can litigate. But if it's just dealing with a situation and no one is threatening jail, then any of the other professionals can help you as well. Certified public accountants. We are licensed professionals who have passed the uniform CPA examination, and we meet education, experience, and ethical requirements. At a minimum, we have to take 80 continuing education requirements each year. We are licensed in several states, so I take a little bit, well, a lot bit more than that. And CPAs usually can practice in any state because we have reciprocity. We have reciprocal agreements. I can never pronounce that word right. Our degree. We have to have at least a bachelor's degree or a master's degree and 150 college credits. So most of us do have master's degrees. You must pass the 4-part CPA exam where we cover auditing, financial reporting, regulation and tax, as well as business concepts. CPAs are licensed by state boards of accountancy, but due to laws of reciprocity, I hope I said that right, many CPAs like myself work across all 50 states. And we take a minimum of 40 continuing education requires hours per year. Our representation rights before the IRS, we have unlimited rights to represent our clients before the IRS, meaning we can represent them in audits, appeals, and tax courts as long as it's not criminal. When to choose a CPA? If you need year-round financial guidance or complex tax planning, you need insight on your accounting as well as business decisions that might extend beyond tax. For services like restructuring your business, calculating your time space, or creating long-term tax strategies, that is where CPA will be able to help you. For instance, we help some of our people to maximize their time space so that they can write off more. An enrolled agent, what they do. Enrolled agents are federal licensed practitioners. They specialize in taxation and they're authorized by the IRS to represent taxpayers. Enrolled agents are not required to have college degrees, but they are required to pass the special enrollment examination, and that is a 3-part test. Um, Former IRS employees can also become enrolled agents. We call them EAs for short. And they must have 72 hours every 3 years, where CPAs have to have 80 hours every 2 years. Um, EAs also have unlimited representation rights. They can represent you in the audit, appeal, and collections, but they cannot litigate in tax court. If you need in most cases, don't go to tax court. If you need tax preparation, IRS dispute resolution, or help negotiating a payment plan, EAs, CPAs can help you with that. Our tax attorneys. Our tax attorneys have unlimited rights. They can represent you before the IRS and in federal tax court. If you're facing legal action, you're being accused of fraud, you're being criminally investigated. For assistance with negotiating settlements and complex disputes, a tax attorney may be the right option for you. If you go to a CPA or an EA and they see that you need a tax attorney, they will tell you. If you go to a tax attorney and you need an accountant, they will likely say, I can help you with this part, but you need an accountant to help you with that part. It's not very common that taxpayers end up in United States tax court, but in the event that you do, we wanted to make sure that you know your rights and who can help you and how they can help you. Okay. So this is a little comparison chart, multilingual, to help you understand who you might want to call on in your situation. And these people are all with the exception of the tax preparer. The tax preparer is not licensed, so they have limited rights what they can do, and it's just around returns that they prepared. But with the CPAs, the EAs, and the tax attorneys, these are also licensed professionals that have a whole code of conduct that we have to adhere to, in addition to the IRS's code of conduct. So, a skilled, trained professional can do a really good job doing your taxes, even if they are not credentialed, but they cannot represent you if they are not licensed. They cannot negotiate on your behalf if they are not licensed. California does have a special state license, and it has unenrolled and non-credential preparers take that license for preparers that live in California. Some things you want to watch out for. No one can guarantee you a large refund without looking over your situation first. If you see those notices, if you have this many kids, we can get you this much money, run. Because you can't legitimately tell a person what their outcome is without any information. A tax person should not refuse to sign your return. If you pay someone to do your return, their name should be on it. They should sign their own work. We are not allowed to charge you a fee based on your refund size. Your fee for tax preparation has to be the same whether you're getting a refund, whether you're owing money, and depending on how much it is. I cannot charge you more money because you're getting a big refund. That would be unethical and illegal. Nor will a reputable person make up numbers for you. So you have to come equipped. That's why we've been talking about getting your information together. And we've been talking about knowing what you can deduct. I saw the question, someone asked if I can give you a list of everything. No, because that does not exist. But what I did give you in session 2 was a walkthrough of everything. And I also helped teach you how to think about these things. Now, because you guys are California and I love you, I will share a gift with you that is a list of deductions, but it is not all inclusive. You may have things that you can deduct that are not on this sheet, okay? But these things are being told to you and shared with you to trigger your brain to help you understand the possibilities of what can be deducted. You can report an unethical person if they're charging you based on a percentage of your refund, if they are making up numbers for you, if they put something on your return that is not correct, and you find out about it and you were not in agreement with it, you can report that person. And to do that, you would complete the form, fax it in, or mail it in, and include any evidence that you have. So we spend a lot of time on our deductions, so I'm not going to go over our filing statuses again. But you just want to make sure if you find yourself in a bad tax situation, you want to stay calm and professional. You want to ask questions. You want to listen more than you speak. You only want to issue responses to answers. Keep it short. Yes, no, I don't know. You do not want to overshare. And if possible, if you find yourself in a situation with the IRS, you want to have someone represent you. Now, what I'm sharing here with you is it's a free training, and it is called the Child Care Tax Savings Masterclass. And in it, I go over 10 deductions that most taxpayers, childcare owners specifically, overlook, even if they have an accountant. So you'll see the word center on the page a lot, but this applies to your business. Oops, screen went white. This applies to your business, even if you have a family child even if you have a family childcare business. So I am going to take some more questions. How do we know the fee? The taxpayer advocate service does not charge a fee. The taxpayer advocate service is free. If you're working with a professional, when you work with that professional, they will likely talk with you and understand what your needs are and then give you a price based on your needs. Just like when a person comes to you for care and they say, "Can you care for my child?" You want to know, do they need full time or part time? Um, you have to know the situation before you're able to quote it. This is a link to the master class for anybody that wasn't able to scan a QR code. It is a evergreen master class, but when you comment on it, if you comment, our staff does reply because they get an email notification that someone has asked a question. So we do sometimes reply in real time. So I'm going to go back to the comment section. We have about 5 minutes, and I am going to look for questions that are repeated, and I'm also going to look for questions that are particularly related to today's training. So, can I provide you with a list of deductions? I strongly encourage you to go back and watch session 2 because we walked through the Schedule C, and on the Schedule C, we talked about each deduction category and what would fit into these categories. But I am going to share with you a list of deductions. These deductions are not all included. There are things that you can deduct that you will find not written on this sheet, but I don't expect it to be because my job is to teach you how to think about this. If I gave you a list of every single deduction, when you go buy something that's not on that list, you would miss out if you didn't understand how to do it. Yes, the class is free. If you want to register for the class, they start a couple of times during the day and it's automated. So when you opt in, you will be able to watch it. Um, I think the next time it starts might be and it might be 7 p.m. So, and I think it's based on Eastern time zone, but there'll be plenty of options for you to watch the training when you select the time from the drop down. So let's see. So this question is incomplete. Please submit the complete question and I'll try to get you an answer. Someone asked, is it just the IRS? Can the city also refund money I overpaid? I'm going to say yes. If you paid more than you were supposed to, then you should be able to get a refund. Someone asked, can we consider the playground where children play as time and space? No. You can only count the space inside of your actual home. Another question. Someone said, I'm a licensed childcare provider, and my tax preparer told me because I was self employed, I cannot deduct the hours I use to consult with families. Is that correct? I respectfully disagree with your tax preparer, but this is often what happens when we work with tax preparers that do not specialize in childcare. If your person does not specialize in childcare, they may mean to help you, they may mean well, but they just may not know the rules. They may not know the special circumstances that you qualify for. Anytime you spend working in or on your business should count towards your time space. I do agree with the person. We cannot deduct hours, meaning I can't assign a value. I can't assign $20 an hour and say you did 4 hours, so I'm going to deduct $80. I can't do that. But I can count the time you spend working in or on your business towards your time space. Someone asks, can the cost or any parts for a college tour be deducted from federal or state taxes? I'm going to say it depends. Does it have a business function? Why were you at the college? Were you at the college because you wanted to see their program so that you could set your program up like their program? Or were you there with your child that you're getting ready to send off to college? If you were there with your child, you're sending off to college. No, you cannot deduct the cost. So we have 1 minute left, and I do want to turn back to CCPU to see if they had any thoughts or anything they wanted to share or say before we conclude. You all have been an amazing audience. I sincerely enjoyed it. I pasted again a link to the master class and a link to our website if you want to get in touch with our team. So I am going to let CCPU take it away. And thank you so much, CCPU, because you guys are amazing.
Thank you, Shanita. We have enjoyed having you here throughout our three-part series of our taxes training. And I'm sure we all have learned so much throughout these three sessions. So thank you so much. I also want to take some time to thank the Linguist Justice team for the amazing work that they continue to provide us through our interpretation services throughout these trainings. Another thing I want to announce as a reminder, you will receive a certificate and resources for attending this session. These will be sent out on Monday. So please give us this weekend and some time to get that all sent out. We have also resent the resources for part one and part two of the taxes series. These were sent out today. But if you have any questions, you didn't receive it, if you didn't receive your certificate and you attended those sessions, please reach out and give us an email at businesstrainings@ccputrainingfund.org. And then last but not least, um, if you guys could all please take a moment to complete our evaluation survey, we will greatly, greatly appreciate it. We always want to hear from you guys. We want to hear your thoughts and feedback on what we can do to better improve our trainings, our any services that you may be interested in seeing from our team. So please take a moment to fill out this evaluation survey before you log off from this meeting. I mean, training, sorry. And I'll drop it in this chat as well, the survey link. And again, if you have any questions regarding resources, recordings, your certificate, please send us an email. That will be easier for us to troubleshoot and give you guys individual assistance on those areas. So I'll also drop our email in the chat as well. Other than that, once you complete this survey, you are more than welcome to leave. Thank you all again for attending. For those who attended all three parts of this series, we greatly appreciate you all, and we hope you guys have a good rest of your day. Thank you.
Thank you so much. Oh, someone's asking for our number. Our number is on the website. If you go to thechildcarecpa.com, our number is there, but it's better if you schedule a 15-minute call. And then we'll be sure that we have time set aside just for you. Thank you all so much. I will also be recording responses to some of the questions I may not have gotten to, and I'll be sure to share them with CCPU so you all get them. Thank you.
Thank you, Shanita. All right. Thank you, everyone. Have a good rest of your day. Bye bye.